It's time now for business news with Madison Reedy. Madison, you were at Fonterra's headquarters today as the dairy giants announced its third quarter result, and what did they have to say?
Well, they had a pretty good third quarter result there. So that's the 9 months to April. Their sales volumes were up 4%. Their revenue was up 1% to $15 billion. But let's be honest, that is not the real reason I was there. I wanted to hear more about their plan to cut debt by $800 million this financial year, and also their plan to cut costs, their capital expenditure by $200 million too. Now, all business journalists were looking at the same thing and wanting to hear the same answers there. And they say that with 3 months left for their full year, that they're pretty much on track actually to meet both of those targets. They were pretty iffy around giving exact dollar figures as to where they were. They didn't really disclose much there, but they did say that they're on track and they're optimistic to meet both of those targets. Now, remember, they did just sell Tip Top, their ice cream business, for $380 million. So that obviously goes some way to reducing some of their costs and obviously allowing them to pay down a decent amount of debt there too. Although they did reduce their forecasted earnings guidance with this third quarter result. So they expected to make between 15 and 25 cents in earnings per share. They've now reduced that back to between 10 to 15 cents per share. Now, on our calculations, that would equal a full-year net profit come July of between $161.2 million and $241.8 million. Now, I put that to Fonterra. They have confirmed that that's the profit guidance that they're expecting to hit by July. Now, that would be quite a large turnaround from last year's loss of $196 million. But even though they do expect to make a profit this financial year, Fonterra does still remain under financial pressure. Now, I asked the Chief Executive of Fonterra, Miles Hurrell, what those pressures were.
So again, Australia Ingredients is really feeling the pinch. You know, we've talked about the drought, the prolonged drought that has been in Victoria in particular, the impact then on milk flows and increased competition for that milk. So that also plays into the decision we've made, the tough decision to close Dennington. So Australian Ingredients has been a big part of that decision, as is Latin America. So again, pretty tough times in Latin America. We've seen some softening in certain categories in Chile, and while Brazil is coming out of the doldrums from where it's been the last couple of years, not to the level that we expected or the pace we expected. So that's played into our decision making.
That there was the Chief Executive of Fonterra, Miles Hurrell, speaking to me earlier today about their third quarter result. Now, they did also announce today a bit of an update on the strategic review of their assets. This is part of its reset. It's looking at reducing and simplifying its footprint all around the world and to focus on New Zealand. So it announced that it's reviewing its farms in China. It owns several of them, a few of them in joint ventures, a few of them it wholly owns. So it's reviewing the ones that it wholly owns. Now, over the years, it's poured about $1 billion into its China farms business, and it has resulted in some losses there. They have lost money on this over the years as well, so seems a bit of an obvious choice to put up for review. Actually funny that they're reviewing it too, because last time I met Miles in person at Fonterra, I asked him specifically if China farms was on the list. He obviously didn't shed much light on it then, but he has now. They're also going to review their joint venture with Nestle in Brazil. Now, that wasn't necessarily all their idea, actually. Miles Hurrell also told me that Nestle actually reviewed their ownership of this joint venture and said, well, we don't really want it. So that then forced Fonterra to say, well, now we obviously have to look and see if we want it as well. Timely that they're going through a review anyway. And they also announced, which he mentioned just there in that tape, that they're closing their factory in Dennington in Victoria, Australia. Now, sadly, that means that 98 people who work at that factory have now been made redundant.
Okay, so today also one of our largest seafood companies is raising the red flag over climate change.
This is Sanford. It's one of the country's largest seafood companies and the largest one on the stock exchange, definitely. So they had their half-year result today, and within that they said that climate change is their largest business risk. So warmer temperatures have made it more difficult to catch more fish. That's obviously putting pressure on their fish stock, specifically in regards to salmon. that salmon are struggling to grow to the sizes that they want and that they used to be, so that's obviously a struggle for Sanford here. Also, it's meant increased biofouling on its mussel lines. Now, that's a build-up of algae on its shellfish, so while that sorts itself out, they obviously can't pick up as many shellfish out of the sea. They have to wait for that to recover. Now, Sanford isn't alone in flagging concerns over climate change and saying the effects are here now. New Zealand King Salmon has also said the same thing.
And what else has been going on the markets today, Maddie?
The NZX Top 50 index rose 0.25%. That's a rise of 26 points to close at 10,263. The New Zealand dollar, that's buying at 64.9 US cents, 94.4 to the Australian and 51.3 to the British pence.
Thank you. Madison Reedy there with our business update.